taking care of business every day. Taking care of business every way. I've been taking care of business. It's all mine. Taking care of business and working overtime.
We are back. I'm your host, Barry Waxler, here with the always lovely and talented Andrea Kay, the always incredible Urban Miaris.
Yeah.
And we
That's not a lot of enthusiasm from Urban over there. What's up with that?
I don't know.
I think he got burned out bowling yesterday.
No,
Yeah.
no, we got.
He needed to go to Skills for some pre-bowling training.
That's right.
I need training. That's for sure. I'm out of training.
Okay, well let's stay out of that one. Okay. So we have an interesting show today. You know?
Yeah, I'm liking the lineup.
Yeah. So
Fun.
we're talking a lot about collaborating and how we bring things together. So I'm going to bring our next in studio guest in. Welcome, Mr. Dave Heistein from Profitwise Accounting.
Thank you. Thank you for having me.
Great. So before I get into a couple things that I wanted to chat about, tell us a little bit about Profitwise Accounting.
Okay, great. Well, we're a small business accounting firm in Serrano Valley. We've been in business for 11 years now, and we essentially focus on working with small business owners to make them more successful with tax and accounting advice.
Okay. What separates you from the bazillion CPA firms in San Diego County? What do you do different?
That's a great question. Really what we focus on as a firm is being really kind of like a holistic advisor to our small business clients. So really taking on the role as an outsourced CFO on a part-time basis. So we typically help our small business clients in four main areas: tax planning, tax preparation, bookkeeping, and business advice. So we roll all that together in kind of a flat rate monthly fee program.
A flat rate monthly fee.
Right.
That's unusual, isn't it?
From an accounting firm? Absolutely. Yeah. So people can predict what their accounting expense is going to be on January 1 and know what it's going to be done on December 31st, correct?
Exactly. It helps even out their cash flow.
Yeah, that's amazing. You just don't see that very often anymore. I've seen other accounting firms, do it, but not be able to hold up to it. So interesting. And the reason that I mentioned a little bit more about our collaborative approach here, we were just talking to Dave on the break about his new book. Or I don't know if it's a new book or an old book, but it's new to me, so it's a new book. Okay, Tax Breaks of the Rich and Famous. So how long have you had the book out?
It's been out 2 years now.
2 years, so it's new to me.
New to you.
New to me. And the thought process here is Tax Breaks of the Rich and Famous. This is not just you telling your story in the book. Am I correct?
Correct.
So tell us a little bit more about it.
Yeah, so it's a project that came together over 12 months with the top tax advisors throughout the country, about 12 of us, and we each basically took a chapter in the book and wrote about a specific subject area.
Great. So here we have typically competitors collaborate, and while they're around the country, may not be competing with one another, but they're typically competitors who collaborated to put out a better product for everybody.
Exactly.
And so is the book case studies? Each chapter is a different case study or just an example? Yeah,
it's more or less. It's case studies and examples kind of put together.
Mm-hmm.
Well, is there any particular case study that jumps out at you that you want to share that would be relevant to the listeners?
The names are changed to protect the innocent.
Yeah, exactly.
Okay.
Exactly. I think there's a lot of great ideas in the book. I think one of the things I'd like to talk about is, when it comes to tax planning, most small business owners really don't understand what that means. Wealthier clients, obviously they hire large firms, they do tax planning all the time. But small business owners, again, really don't understand what that means for them. And we kind of have a unique process that we go through to kind of uncover those things. We kind of do a comprehensive study asking them all these different questions about, let's look at, on the personal side, how are you spending money currently? Are you supporting any family members? Do you have children? Do you have multiple businesses? And kind of getting an understanding of the complete picture, then we can map a strategy together that works for them. Some of the ideas that I like in the book would be, family employment. That's a big opportunity. If you have, children that could work for you, or maybe you're supporting parents, the idea of shifting taxable income to lower tax brackets is always a great strategy.
Absolutely.
Entity structuring is important. So is it S Corp? Is it LLC? Typically, you can get some tax savings by doing proper entity structuring as well.
So let's say you've got a family-run business. Let's say we've had a couple of restaurants in recently. We had one. I'm thinking of Brian's 24. Yeah, I think there's like 4 or 5 or maybe even more of them working together. But I think they're all mostly siblings. I'm not sure if it's generational or not.
I think it was passed down from generation.
Yeah. Okay. So let's say we've got a restaurant that's got parents and then children working together. What do you mean shift? How would you tell me about that tax strategy there?
Right.
Because it sounded like you're talking about shifting income from the higher to the lower. Is that generational, or how does that work?
Right.
Well, that's actually either way. But
that's actually funny. That's one of our clients that you just mentioned, Brian.
Oh, really? Okay.
So I know them well.
Great food, great burgers.
Yeah, they have really good food. So typically, that strategy works well with minor children, or maybe if you're supporting parents. But really, the idea is, let's say you have a business. Your child goes to work for you. Maybe you pay them, let's just say $6,000 a year. Okay. And so the business takes the full deduction of the $6,000 for the payroll expense of the child. And so the parent gets that deduction if it's a closely held business. And, since that is actually under the standard deduction amount for the child doesn't pick up any taxable income. So, that's a big win. And, smart business owners may do that for 10 or 12 years. Legally, the IRS says your child has to be at least 7 years old to be employed by you. Mm-hmm. So you can do that strategy for 10, 11 years until they're...
And it's all legal.
It's all legal, yeah. Well, they have to do something for you, right?
You get a lot of the college fund paid that way.
So is that what's going on with Shane and Carrie?
No.
Have they worked for you? Have they?
That's why my kids are not on my payroll, because we cannot justify that they've actually done anything.
Oh, that's right. They got to at least stuff an envelope.
Yes.
Something.
Yeah. Yes.
They have to do work.
Carrie's writing
something in the business.
Carrie's taking care of the horse. Doesn't count as work?
Yeah, well, not unless the business buys the horse, but then it doesn't have much of a purpose to do that either. So.
All right.
So the thing with hiring children is you need to pay them fair market value for the work they're doing. I need to keep timesheets, and that money needs to go into a specific account designated for the child. You can't put that into the general grocery fund for the household. So there's specific things you need to do to legitimize that deduction.
Yeah, and then you have things like home office use, and when you have that kind of business out there, there's all kinds of stuff. So
yeah.
You're listening to Close Up on Sunday Business here on KCBQ, streaming live at AM1170theanswer.com. Give us a tweet at CloseUpSD. Email me at barry@closeupsandiego.com, or find our page on Facebook. Want to hear from you? I'm your host, Barry Waxler, here with Andrea K. Urban Miaris, and our guest is Mr. Dave Heistein from Profitwise Accounting. So you do. Let's talk a little bit before we get to one of my favorite topics here. Let's talk about the planning mode one more time, because as a financial planner, I guide clients to come over and we give strategy, and you figure out whether it fits within the lines, and we all collaborate and put it together.
Right.
From the standpoint of planning, most of our clients come to us when it's in the 11th hour. Okay, if you're advising a client when to start doing planning, when do you start the plan? Right.
So really, our ideal situation is when a new client comes on board to really start that process right away. So we have a series of initial strategy sessions that we do, which really is kind of a State of the Union address, where we look at all the different elements of their financial life, and if it's warranted, we'll do a tax plan for them, kind of map out different strategies so we can be proactive with it. But as Barry was saying, if you wait to the 11th hour, a lot of times it's too late to truly make those things happen in the correct way.
Right. Well, I mean, just one example is, you get to a certain point, if they get past September, October, and they want to set up a qualified plan, it's too late in some cases to do that. Where maybe they're stuck with a lower deduction from just a standard, IRA or one of those types of programs, versus putting in the 401ks if they want to. They have a timeline they have to fit into.
Yeah, too many business owners, especially the startup type of business owner, or the small one, says, I'm not going to do any tax planning until I'm making money. Or they'll say, they don't plan for retirement. That's for sure. I mean, if they only put 5 or 10% of their income away when they started, it'd be great. And in business plans, I tell people at least put a paragraph in your business plan in the financial section regarding tax and financial strategy that you have.
It's an interesting point. How many of your clients do you see actually building a business plan to operate off of and living by it?
Yeah, unfortunately, most of them don't.
Right.
It's something that we always talk about up front, and even a service that we provide some of our clients if they'd like help actually developing a business plan. But most people like to kind of fly by the seat of their pants. They have an idea in their head of where they want to go, and they typically just kind of see what develops.
Yeah. Well, let me get to one of the points. One of the business models that you've employed that I believe is rare in our economy or rare in our business society here. Is you've built a model where people can come to you and have you operate as their CFO, correct?
Correct.
Okay. Why does somebody come to you to be the CFO?
It's a great question. Typically they have some challenge in their business, so it might be budgeting, it might be they have certain growth targets they're trying to hit. I would say typically if everything's honky-dory and they're confident in their numbers and everything's great, then they may have less of a need for our service. But usually there's some underlying challenge or problem that warrants wanting us to get engaged in a more frequent basis. And it can be key performance indicators. That's one thing we go over. So we establish those for a small business client. Let's set up some metrics so we can kind of measure your success. Let's set up a budget. And even from a profitability perspective, maybe there's some cost cutting that can be done. Or one of my favorite topics is kind of business model design. Being a prior entrepreneur, I like kind of sitting there and, okay, well, how can we make this business more profitable? What exactly are you doing? Are you really leveraging the internet? Are you leveraging your relationships? Maybe there's some other things you can do to actually be more successful. So that's the part of it that I really enjoy, is kind of helping on the advisory side.
Well, you say you're a prior entrepreneur. Are you a recovering entrepreneur?
Recovering?
Yeah. What was it? Tell us about your background before you became Profitwise Accounting.
Yeah. Well, I have an interesting background. I've always kind of focused in two areas, accounting and software. And kind of during the early internet startup phase, I ran a software consulting firm. Also was involved in an internet startup in Silicon Valley, doing web development, web consulting, and did a couple other those businesses after. So that's kind of my background on the software side. And then after that, kind of focused more on the accounting side. About 14 years ago, did some controllership work for some local businesses, and then decided to kind of pursue the CPA route and started this firm up 11 years ago.
Interesting.
That is interesting.
Well, one of the things that came up, and I've seen this in many cases that we didn't talk about, and to me, this is one of the biggest reasons to consider, a CFO on an outsourced basis versus hiring somebody inside. You take a lot of the medical practices in town, they bring people in, they do stuff. I've never seen so much theft rampant in a medical practice? In a medical practice. Absolutely.
Of what? The drugs? The pharma?
No, they get into the books and they steal from you.
Oh.
Okay. And when you get an outsourced CFO, that the one thing we didn't talk about, and this is kind of, what you don't know is what you don't know. Okay.
Right.
Because if you haven't seen it or experienced it, it's not real. But when you hire a professional third-party firm, you have somebody that you can hold accountable.
Right.
Okay, for anything that goes wrong, and somebody that's going to catch all of that fraud and theft and all that stuff going on. So, and I'll throw that your way because I think outsourced CFO is a great thing to have in your business. But most people don't realize once they've hired the outsourced CFO, they don't realize that they just protected themselves against all that theft.
Mm-hmm.
So.
Sure, it's about having proper checks and balances, right? And a lot of theft is just happens because of opportunity. You might have an office manager or somebody running administrating the books, and there's really no one looking over their shoulder. The owner's too busy running the business to really pay attention. So there again, there's an opportunity, and that's when a lot of theft occurs. Obviously, if you have a firm engaged where there's on our team, there's typically a bookkeeper involved, maybe where they're doing reconciliations of the bank statements, someone kind of looking over that aspect, and then we're reviewing financial statements, and we can kind of see if there's deviations hey, all of a sudden you're doubling, your meals and entertainment expense every month. What's going on here? Maybe there's something we need to look deeper at. So, it's a great way for a small business to make sure that they're, protected.
Yeah, I find so many times that businesses, when I step in on someone in business, their chart of accounts is not for their industry, and they have no clue on what their industry financial norms are. They don't know what their cost of goods should be, profit margin should be, or even salary base.
Yeah, it's interesting. Well, we're starting to run short on time. Tell our listeners how they find out more about Profitwise.
The best way to find out more is to go to our website, profitwiseaccounting.com. You can fill out a form and get in contact with us that way.
Great. And if they want to contact you directly, how do they get into your office?
So phone number 619-819-0253, and we're on 5752 Oberlin Drive, San Diego, California, 92121.
Great. Hey, Dave, I appreciate you being with us. I'm glad we caught up. It's been a number of years, and Andrea, thank you for reconnecting.
So thanks for having me.
Great.
Glad to do it.
Yep. This is Close Up on San Diego Business here on KCBQ, streaming live at AM1170theanswer.com. Send us a tweet at CloseUpSD or just find our page on Facebook. You can always email me at barry@closeupsandiego.com. Let me know what you think. I'm your host, Barry Waxler. We'll be right back after a word from our sponsors.